Could you guys hear me in YouTube land and Discord land? Put something in the chat. Either one, I'd appreciate. At least YouTube. If you hear me, thank you, Tastic. All right.
We have posted the Eurozone Consumer Confidence June 2023 report on the feed for all those interested.
So obviously, here's my info. Website. You can get in my trade room and purchase my courses there. You need to get a hold of me. Either one of these emails work. Here's my Twitter. And then Apex Trader Funding, which we'll go over a little bit today. Use this, you get any available discount. Right now they only have the 50%, I think, but I'm sure another sale is right around the corner. Alrighty. So I just missed a whopper trade NASDAQ, so I'm already in a bad mood. So bear with me. We'll go over it at least so you guys can learn from it. And the only reason I missed it is because there's multiple events, one in ES, one in NQ, and I decided to draw the ES first, and I was supposed to get into my NQ trade aggressively, and I missed it.
JP Morgan now expects 2 additional 25 basis points rate hikes by the Bank of England beyond August, taking terminal rate forecast to 5.75% in November versus 5% previously.
We'll go over some awesome market pulse examples from today. That's the newest indicator from Bookmap. They just keep getting better and better. So we'll go over that. Hold on, let's see. Let me put this step in. Oh, let me do the disclaimer first before we start here. Get this down here. I'll be back in 90 seconds.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites or digital venues are for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit or that losses may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment and wholesale Senate Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41. Hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account below is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results and all of which can adversely affect actual trading results.
This trade room and its webinars are not intended to mirror my trades or to give specific trade recommendations. The analysis and setups I share are trades and potential trades that I'm taking for myself based on my personal analysis. The goal of this room is to teach traders how to identify specific areas to trade with an edge for themselves, but ultimately the decision is yours. Trading is extremely risky, and if you do decide to follow my personal trades, you do so at your own risk and could potentially lose your entire account and even more. I'm not always profitable and have routine drawdowns on my trading accounts. The spreadsheet we have access to is my personal spreadsheet that I use to enter zone values and ATR values that help me pinpoint exact prices for my trades. You can see when I enter zone prices into the master spreadsheet as well as the prices to enter trades, whether you want to go long or short. You have the ability to copy this spreadsheet and enter in your own values and use mine to confirm the zone prices until you're able to draw the zones correctly yourself. The spreadsheet is not telling you which direction to trade, as it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade. Alrighty. All right, let's go over the bad first. There's really no good yet, but there were some really good market pulse examples that I'm going to show you, like I said. So this was way down here, right at the open. We got, turn this off for now. This is the market pulse I'm going to turn off. So you had a double whammy here. Actually, this should be dark blue. I like to trade and put my double whammies. I color my specific trading setups that I trade off. I have 6 distinct setups that I trade off of. This was a double whammy, and this was exactly how they're supposed to work, how they usually work, I should say. So this was, you had 250 stops, you had 150 buy ice. So the double whammy is dumb money puke, the retail trader puke, the dumb money. Don't be insulted. I'm the dumb money too. I'm not the dumb money, but I'm a retail trader. You know what I mean. The only reason they're smarter is because they're bigger. That's why I refer to them as the smart money, right? They're smart because they make themselves smart because they can push the market around. So anyway, stop runs are usually retail trade pukes. So you get the puke into the waiting hands of buy ice and market rips. So this was an example of an inflection zone trade, in aka Izzy trade, and that's this trade here. Inflection zone trade. Take fade trades with moves into prior inflection zones. What's an inflection zone? Inflection zone is what I use on the bar charts. Important areas from prior events, and there's 4 important areas that I will draw these zones. I know I go over this every week, but there's always new traders in here. So tops and bottoms of balance areas. That's not a good drawing. Hold on. Tops and bottoms of balance areas. High volume node to balance areas. Selling tail, buying tails and selling tails. There's buying tail, buying tail, buying tail, buying tail, and then directional conviction. Directional conviction. So those areas that I will draw. Hold on, let me turn down this volume here. That's the market pulse firing off. All right, so I'm going to turn on the squawk because there are Fed guys talking right now. And I want to hear what he's saying, but if it gets too loud, if it's overbearing, because this YouTube software for some reason amplifies my actual internal volume on my computer where I can't really control it, so I've got to turn it all the way down. But if it gets to be overbearing, let me know and I will turn it off because I can't tell on my end. So just post in the comments if it's like drowning me out. All right, so anyway, the inflection zone trade. So I had this zone drawn from prior events. This was actually this day. This was a gap up. So gaps are directional conviction. Then you had a buying tail and another buying tail launched from here. You can see came right into the zone. Got your volume event. These trades are taken aggressively. Meaning I have 2 different types of entries. Aggressive entry and conservative entry. So the aggressive is the minute it breaks an ATR just outside of an ATR plus 15% out of the zone, I enter the trade. Then we have other trades where we wait for a retest of the volume event, which happens 70% plus of the time from my account. This is just from my personal observations. And then we get in once it gets back outside of an ATR. So those are the 2 different types of entries that I take. So you can see here I missed this trade. This was supposed to be an aggressive entry. At the time the ATR was I think like 16. So the top of the zone was 85. I was supposed to be in, I think it was 02 I was in, supposed to be in this trade. And I was drawing the other zone and it was just, you could see this swipe up. I just missed it. And by the time I saw it, we were up here, I'm like, well, I'm not chasing it, but this was perfect. This is a perfect example how I trail my stops too, right? So you had the first event here. Should have been in aggressively. Shoulda, woulda, coulda, as my grandpa used to say, but I was not. Then you have a new event. So what do you do with that event? Well, this is how I trail my stops. So my stop was originally going to be an ATR below here because I forced these markets to stay out of Algoville. You can see all, when it looks like a Christmas tree, that's Algo's playing with your money.
NQ stopped by NQ, 151 contracts.
Right, we have something current right here. I'll come back to this. Well, let me just show you quickly because NASDAQ doesn't move very fast, so maybe I'll miss another trade here. So anyway, my stop was below here, and I'm being sarcastic on that, by the way. And what you do is when you get the new event, I trail my stop based on the new event. Actually, let's see something here. I don't think I would have stopped out of this. And you see here, this was, I'm hoping I would have stopped out of this because this has been very painful watching a 100-point move. Let's see what, I think I still have the original zone in there. Yeah, 27, 25. So if I was long off that event, I would have stopped out at 0250, right? So basically right where my entry would have been. I don't think this ever got down to 0250. Got close. I hope it did. All right, it did. So that actually makes me feel better. So I would have been, per my rules, I would have been stopped out of the straight to the tick. I would still be bitching right now that I got stopped out to the tick. But this was the new event. This is how I trade these. If this market's able to push an ATR out of that event, then I am out of the trade. So that actually makes me feel a little better that I didn't miss this, because I'm just sitting here looking like, you got to be kidding me. I missed this trade, and it's just straight up 100 points. So I would have been stopped out to the pretty much the exact tick.
Soybean iceberg sells ES 151 contracts.
But this is another example on how you want to be monitoring your ATR, because I guarantee something. I still would have been in this trade. Let's look at this quickly before I draw this new zone. 639, 839 central. Let's see what the ATR was, and then I'll tell you if I would have been stopped out for sure. So you still may have to hear me bitch here. Hold on. So this was right about then. ATR was 17.24. So that's why you want to always. So the spreadsheet's available to my trade room members. Of course, watch this. I guarantee. Now watch this change. So with that ATR that I didn't adjust, it was at 250. Now if I put the new one in, hey, look at that, 0075. So back to bitch mode. So I did miss this trade, right? So I would have had my stop at 0.75, and it got down to, that would have never been stopped out, right? My stop would have been right here. This is why I do this. I force the markets to get an ATR plus 15% out of the zone to stop me out. I would have never been stopped, and then it moved 100 points. So there you go. So right back to feeling miserable that I missed the trade. All right, on a new opportunities. So that's the one great thing about these. If you miss a trade, there's always another setup right around the corner, especially if you're watching multiple markets, which you should be, because these events are universal across all products, all futures products, and they react the exact same way regardless of what future product you're trading. All you need to know, the difference is the threshold of the event, meaning 150 is a lot in Q, it's nothing in ES, 150 contracts, right? So we have different thresholds for each product, and that's covered in my SI indicator course. I tell you guys every week I'm close to completing the new one. Well, now I have a deadline, July 1st. I told my room yesterday it would be done by July 1st. And if it's not done by July 1st, they get to come to Scottsdale, and every one of them gets to punch me in the face. So and I'm risking my life, basically, to not have it done by July 1st. So it will be done by July 1st. So anyway, the new course and the old course is, and if you buy the old course and you remember my new trade room, of my trade room, when the new course comes out, you get the new course for free. So, if you join my trade room, don't be afraid to fast track your learning and get the course now before I come up with the new one, because you'll get the new one for free when I release it. So that's one of the perks, another perk of my trading room. But anyway, this was a stop and hold setup right here, one of the 6 setups. This was threshold's 150. This was 151. This was, I doubt anything here was aggressive entry, so I really wouldn't be in here. But here's the point: I would still be in this original trade that I missed, and we're 140 points away from that entry, right? So this is how you can catch some trending, and all I would have been doing here was trailing my stop to new events, unless actually, no, that's right. Yeah, I would still be in this trade. So this was, just quickly, you can see these 3 events, right? Like I just said, I missed the aggressive entry on the Izzy trade. Stop would have been down here. You get the new volume event, I move my stop to that volume event. Would not have been stopped out. We just went over that. Then I don't think there's been anything threshold here. Let's see. Oh, that was threshold here. So this was a zone that just came in, but it never violated that to the downside. So I'd still be in this trade. Then I would have taken this stop that was below this event and moved it to this event. And then when this new event just fired off, when we were on the webinar, I'd move my stop to that event. None of these stops would have been touched. This is how I trail my stops, based on things that are happening in the market, volume events, ATR, versus, oh, I got a big winner, I need to trail my stops so I don't, give back my money. Well, what do you think these algos, you don't think the algos know that's what traders do? And that's why you get whipsawed to death. And that's why it'll come back, stop you out, and then rip 200 points. Things like that, right? So I force these markets to move an ATR away from the volume event not only that, so say right here, I would force this market to come all the way back, multiple ATRs, get through the volume event, move back an ATR below the volume event, and then stop me out. So if it can do all that, then the trade is just wrong, right? And then you move on to the next trade. But this was a 150-point trade and counting. Let's see where I would have got out of some of these. I'm not saying I would have had the full amount on this entire way up. But I think I missed an ES trade too. This has just been a debacle, because then I went over to NQ trying to draw the zone, see where I get in, and then I missed the ES trade too. We'll go over that here in a second. But anyway, I probably would have been out of a couple here. So I probably would have been on a half here, depending on how it reacted. This is a prior market profile composite. We'll go over market profile here eventually. So I would have been out of some there. That's pretty much around, I would say, probably around 15, 120-ish. And you can see we're at extreme standard deviation and VWAP too. So this is where these algos will kick in and revert back to
fear
VWAP.
and greed
So
index 79
you gotta be very cautious trying to hold
extreme greed
into
and the crypto fear
extreme
and
standard
greed
deviation of
index,
VWAP,
65
especially if it's
100
confluent with
equaling
something
greed.
else. So I definitely would have been on a half of my position here if I did put that on. You had the top of this, which was confluent with extreme standard deviation. Again, here's VWAP. This is one standard deviation called daily value area. 1.5, 2. So I would have been out somewhere in there, half of them, and I still have half on. And then I leave half on until I always leave a portion on, not always half, but I always have some left till we either get to the red lug. These are Ludwig levels. I should have put that on my trading, my introduction page, but I'll show you guys here in a second. Either Ludwig levels or an opposing volume event. Kind of like where I was showing you how I trail my stops, right? So if I were long here and I get an opposing volume event and it fails, then I'm out. So this has been quite painful. And then here was ES, the same thing. I can't believe I missed both these trades. This is pretty sad, considering I've been sitting here for 3 hours. This was another Izzy. This one was a little different. It was at the bottom of the zone. It was the bottom here, and it was kind of into this next one here. This is where this market gapped up. But you can see all the things that's happened in this zone, right? Buying tail, buying tail, buying tail, buying tail, buying tail, directional conviction, more buying tails, got to the bottom, volume event, launches. But there's one caveat here, so I actually did not miss this trade. This at least makes me feel a little better, like I was saying. This is an Izzy zone, but this Izzy zone is below current balance. So I would have taken the Izzy trade, but for this trade, because these are not the best odds trades, if you were below multi-day balance, the longs are not usually very good setups because you have all the longs that need to puke if it starts to move out of that area. So I would have still taken this trade if it retested and failed the volume event, which it did not. So I did not miss. I hope it didn't anyway. Let's see. I don't think it did. No. So I did not miss this trade, but I did miss the NQ trade, and the NQ trade was not below. I guess you could have said it was most below balance here too, but this was far enough away from this balance area where I
Gold stocks LTC 245 contracts.
So Fed's house, as the FOMC broadly feels it will be appropriate to raise rates again this year and perhaps 2 more times.
So I took this trade and then I held it in the number. And you guys, you gotta realize when numbers come out, there was what was it?
US. We kept rates on hold to give ourselves more time to make decisions.
At 9 Central. So you can see how the liquidity pulled here. So this was actually a nice winner. It was a 30-40 tick winner, and then I'm holding it in a number. I know that risk. I actually didn't even get a chance to even look at this going into the number after I put it on, but. You know, if you are in trades going to number, you're probably better off just getting out of the trade, waiting for the number, and you can put it back on, and so on and so forth. But this is not surprising. When new information hits the market, all bets are off, right? Numbers, Fed talkers, Fed speakers, like right now. Actually, let me turn that on. I muted that other computer. Oh, that's working. Hold on a second. Let me see. Yeah, he should be talking. Right, but the point is, you know, right now at 9 o'clock there was a Fed speaker as well. Then you have some later on today too, I think. Hold on. So what I'm looking at here is this is part of my trade room too. You can see this information. There's my sweet gold trade, by the way. That wasn't very fun. I'm not stopped out yet, but it's not looking promising. So we had the Fed Meister was speaking at this is Pacific time, so 9 o'clock Central, U.S. existing home sales. So this is what I held that gold trade into, and that's the risk I'm taking holding in. So my stop, where's my stop for this trade? Well, it's an ATR below the volume event, an ATR plus 15%. That's what I demand. So I demand for me to be wrong on this trade. It comes all the way back and can push through the volume event and an ATR below it. Now we've had a new event, so I can actually trade this event. I'm not going to change my stop where my stop is because I would have to move it lower. I rarely ever move my stops further away. That's what bad traders do, and I don't do that because it's just not I'll stop out and then readjust, right? So if the volume event happened higher, I would trail my stop like I showed you in NASDAQ. I would move it up, but in this case, I would not move it lower. So if I stop out, I stop out, but this is a new volume event, so let's see what's going on here. I don't usually trade I don't trade stop runs and gold that often because they fire off every 5 seconds, it feels like. But if they're important areas, I will trade them, and I believe this is an IZZY. I think that's what I took the first time. I'm almost positive it was IZZY, so let's take a look at the bigger picture here. So this is the most recent volume event. You had 245 sell stops. And this is into... There you go. This is another IZZY. So I'll put on another long here based on this new event. I'm already long off that first one, and now here's the event in the inflection zone. I'll play for that. So let's see what that is. So the way that this works, again, this is proprietary to my trade room, this spreadsheet. If you join my trade room, you get access to it. You draw your zone based on where this came in, like I tell you guys all the time. So you have your bubbles here. You want to have your last price line on the chart, so you right-click the middle of the chart, get configure visible components, make sure your last price line is checked. Okay, sorry. So you have that, and then that helps you. And then I take my bubbles off because it helps me find the actual traded prices. So you can see this red line here. That's the stop run. That's where it started. So I started my zone there, and I continued it all the way to where it ended. You can see the exact prices here, and that's the zone. So 1927.6 down to 1926.5. So you come in the spreadsheet and you enter those values in. So is the original zone. So my stop's at 56 for that first long I took. No, I'm going to put in this new zone. I already forgot what it is. 1927.6.
At 10:30 a.m. Eastern Time, we get EIA natural gas change forecast 90 BCF on the prior 84 BCF. We also expect comments from ECB's De Guindos, who participates in a roundtable organized by the Spanish Association.
Oh, actually, no, I take that back. We've got crude. Crude is in 5 minutes, so crude is pushed back to today because Monday was a holiday. It's always on a Thursday. So we got the crude number coming out here in 5, and then the natural gas is at 10 o'clock Central. All right, so then the other factor here, in the goal we put in our current ATR, very, very, very important. You're adjusting to the current volatility of the market, right? This is what drives markets: volume and volatility, volume and volatility, not lines on a chart, right? Yes, the areas that you look at could be important, but they're not important unless there's actual real money playing in those areas, right? All right, so you can see here this moved out of here. Let's see if this is official. I think I already missed this entry. So to make this a long setup, so we have all these prices that determine. So based on my watching 14 million of these setups over the last 5 years, I've determined that if the market can get an ATR away from the volume event, that's showing strength for that area. Whether it's bullish or bearish, it's showing it's able to push that far away. That tells me this is a bullish event. So what price was that? It needed to touch 1930, and of course it got right there. Let's see if it touched it. So this missed by 1 tick. So you can say to yourself, okay, that's close enough, because this, if it touches, now we have a couple different strategies in play here. I've got the BARF is always in play. That's a blind ATR retest failure. That's the strategy here, right? BARF. Take any trade on an SI volume event that has an ATR retest failure. So this is obviously the most active trade because you're just literally trading any volume event. I don't care where. So it's blind. So I don't care where we're at on the chart. we're at in the loves, whatever, it doesn't matter. I would take this trade for that strategy just based on the volume event. The whole idea is what I'm trying to show my room and you guys that are on the webinars, that the volume events are inherently the edge, right? So these volume events on their own are the edge. These areas of trap traders or traders that are invested in these areas, right? So that's the edge. When you can apply these areas, these events to important areas, now you have a real edge, right? So if you're watching, Bollinger Bands or MACD or whatever 85 things you have on your chart, if you get a volume event there and it respects the rules, that's an even better edge. But this in itself is inherently an edge, and that's why I'm trading it. Yes, it's probably the lowest winning percentage, obviously, because there's just so many of them all day long, and it has nothing to do with where we're at chart-wise. But this is an edge. You take enough of them, it is a positive expectancy. So that's why I'm taking this trade. But it's the most aggressive trade out there, right? So I demand an ATR, a retest, a failure to take this trade. So as far as the Izzy trade, that's supposed to be an aggressive entry. I did not get that in, I wouldn't have been filled anyway. So that entry would have been at 03, right? It never got up to 03, so I'm still wouldn't be in that Izzy trade. So I will put that in now. So I'm playing an Izzy trade, inflection zone trade, a volume event in an important area. The minute it breaks out of here, I will go long at 03, right? So let me put that in. And what's great about this spreadsheet, you put your risk parameters in, which your account size is, how much you want to risk on your trade. So I'm risking 10% on trades. You should not be risking 10% on your trades. We go over this every single week. If you're trading because I'm trading these Apex accounts, because each account has its own Apex account, right? So I can keep track of stats for each one of these events instead of having everything balled up into one. This is a much better way. Concentrated way to say, okay, this slug is this winning percentage, like is this winning, and this Apex is allowing me to do this. And as these go live, then I'll have live accounts for each one of these. I was trading my own accounts for a while live on these webinars and things. I just make too many mistakes. So this is a good way, and this is a good example of using the Apex. It's a good segue into the Apex for you guys. It's this, right? So if you're practicing, if you're trying to learn what you're doing, if you're struggling, this is the best one that I've seen. That's why I put my name behind it. I've been using it for over a year and a half. They do exactly what they say they're going to do. You can get funded. Again, you can just use it to practice, right? So it's that's what it is normally. If you hit this and you come in here and you put in Pulcini 50, right? It's not.
95 BCF, 95.
That's the code I put in earlier. Put that in. That'll give you, right now, they have a 50%. It's always 50. This coupon code is always good for at least 50% off. If they go to an 80% sale, which they do all the time, it's good for the 80% sale. To any discount they have going, use that code and you get the discount. So the point is, you can do any of these tryouts per se, and the hope, if you can make your profit goal before you lose the trailing threshold. And what's hard about this, and I learned this the hard way, because I said when I had a very well-known trader contact me about this and said they were the real
Gold
deal.
Ice Iceberg by GC, 153 contracts.
And I said, okay, well, what I'm going to do, I'm going to go and qualify. So as I should, as a professional trader, I better hope I can qualify with the trade room and so on and so forth. So I'm like, I'm going to do that. And then once I do it, get funded, and then I'm going to let my trade room know they're legit. And I did it, got funded. But the issue back to there's gold, there's ice coming in here too. So we'll keep an eye on this. Now I'm really interested to trade that area, because that's that's Izzy zone with ice. I like trading icebergs and gold. The stop runs are a dime a dozen. So anyway, I did it and I got the account that day. I qualified, got it that day. I'm not saying it's going to happen the exact day. It's usually within 24 hours you get it, but it's usually right away. Got that, traded it live, got paid. So I was able to let my room know, hey, this is legitimate. These things are popping up all over the place, right? And a lot of them, most of them, 99% of them, from what I can tell, just want your money. They just want your. It's a great business model, don't get me wrong, but they just, because 95% of traders fail, right? They just want that, and then it reoccurs, right? These guys are actually interested in funding traders, and you can see they've paid out $25 million in the last year. That's, so that's pretty much how long I've been using them. It's about a year and a half. They're legit. Put my name behind them.
And we have posted
Again,
the EIA natural gas change.
People are always like, well, what if they don't pay? If, this day and age, if these funding companies aren't paying, it's going to be all over social media in 2 seconds. So again, I would not put my name behind this company. So this is the whole point. Is this is a great way to practice what you're doing, and the thing is, you can do it. You have skin in the game. A lot of people are like, oh, I can't trade sim because I don't treat it the same way. Well, if you do this, you at least have something in the game, even if it's $100 or $50 when it's 80% off or whatever. You still are going to lose money if you don't trade well, right? So it makes
Gold Ice Iceberg by GC 151 contracts.
It makes you at least trade discipline, and then if you do well, then you're funded. That's what I was getting at earlier. That just quickly, and we'll be done with this part. You have a trading threshold during the tryout. So the first couple times I did this, the first time I was up like $7,000, right? And then I pulled back the $5,000. I was still up $2,000. I didn't really understand the rules at first, and I got knocked out of the account. I'm like, well, what the hell? I'm so profitable. Why? It's because it's a trailing threshold. So it makes you really learn how to follow your trading rules and respect your trading rules, right? So you can't pull back $5,000. You can be up $8,900, $100 from the profit goal. If you pull back $5,000, you would still be up $3,900. You're out of the account. That sucks, right? Because you're still profitable. That's the way they do it. I understand, and it does teach you discipline. So just be aware of that. When you go live, it's a different story, and you can watch my Apex. It's on my YouTube. Here, I'll just post it in here too if you guys want to watch it, because it was a good webinar.
Deutsche Bank now
Once you go live, it's a
three-quarter point rate hike
story.
from the Bank of England, taking bank rate forecast to 5.75% versus 5.25% previously.
Right now. Actually, let's just take a quick look here.
And the dollar yen at a fresh 7-month high, last up 0.58% to 142 spots.
So we still haven't retested the zone. So I will take a trade off of this NASDAQ zone if we get a retest failure. So this trade was not anything where I was going to be aggressive, but I will take that if it retests. And then let me just check ES here real quick, and then I'll. So this doesn't hurt as bad. Like I said, I wouldn't have been in this trade because it was not an aggressive entry.
Chains improving.
Soybean Ice Iceberg sells ES 151 contracts.
There we go, some of the soybeans too, but you guys can see how these markets react, and I want to go over the market pulse too. Don't let me forget, because there's some really good examples today, like this one, for instance. But anyway, you had your buy ice here. There was 1,000 buy ice to start the day.
We have not seen much
launches right from there. There's been nothing since, right? So, if you did get in aggressively, there was an Izzy zone, but like I said, I wouldn't have taken this aggressively below the balance area. But this was a zone. If you said screw it, I'm getting in, and this was far enough away. I mean, we were down here, so it wasn't a terrible trade, especially with back-to-back Izzy zones here. Again, it didn't matter because I missed it, but the point is, this is a nice, 17-point trade and counting. So all bouncing off of the volume event, right? So that's the most important thing you can use. I don't know if I didn't mention that. All right, so let's try to put on a live trade here, or something soybeans. So this is, and we'll go over the Trader Map Pro too. This is really interesting. So quickly, this is one of the newer things. And we'll come back to this, but you can see crude. Look where all this liquidity is versus below. Where do you think this market's headed? I'm not saying right this second, but I will bet you we get up here within today or tomorrow. That's just silly. But we'll set one of these up here on this webinar. All right, let's see. Soybeans. Grades have been pretty crazy lately. This just happened. Soybeans is rolling, looking like NASDAQ today. Usually you got about 10 minutes to come over here and draw the zone and get situated. This thing's like ripping from. So you can see the sell ice came in, and they're already wrong, right? So when this stuff first came out and I started doing webinars, you had these competitors or wannabe competitors at Bookmap. There is no competitor to Bookmap as far as I'm concerned that I can see anywhere close to what they offer. But they would come out and they would try to discredit what I was doing or what I was seeing with these volume setups. And they would think just because it was sell ice, I would say, oh, you just jump in and you want to sell. Well, yeah, the odds are much greater that the big money is going to hold this market. The odds are higher that it will hold and go lower, but they're not always right. And this is a perfect example. Someone came in here and tried to stop this market. And how's that working out for them? Not very good, right? So we have a specific setup for this. One of my 6 setups in my course. This is called broken ice. I know it's high tech terminology. Broken ice. These guys are wrong. So let's hurry up and get this zone in, and hopefully we can actually put a trade on. This should touch exact prices, so I don't know why I don't have that on. You want to zoom out here. So I want to move this down a tad. You have hotkeys for all this stuff that you can just click instead of going up here every time and hitting edit and none, because you got to get back out of the edit mode. 1480.75 down to 1478. And here's the shocking retest of the zone. We have an actual trade for this called the ATR reversion trade. Let's put this in here real quick. So 1480.75, I believe I said. No. Yes. And then 1478 is the bottom of the zone. Plug that in. Check your ATR, average true range. I'm using a 5-minute ATR, Wilders. It's just the default on Thinkorswim. You can get it on any trading platform, most of them. This is actually pretty high, 4.11. So soybeans are rolling. That means all that means is it's rotating about 4 points, 4 cents every 5 minutes. That's a pretty decent rotation. The points in here are the same as ES and the tick value. My point is the money is just as green in soybeans as it is in ES. Stop staring at the shitty ES all day long, pardon my language, if it's not doing anything, and broaden your horizons to other markets, because you're missing opportunity, because it's are the same. The markets react the same to these events because they're volume events. They're caught traders. It's the same stuff over and over, no matter what market you're looking at, as long as you know your thresholds. All right, so that to make that a bullish setup, it needed to touch 84.75. Did it touch 84.75? Came within 1 tick of 84.75, of course, and I have to sit here and question whether I should put this on. I mean, if I had an algo set up for this strategy, which I'm actually going to have soon, they wouldn't put on this trade. This is not an official ATR out of here. As a human, I can use more judgment here, and I'd say, okay, depending on what we're going to look at, bigger picture. If I'm bullish, well then I'll say that's good enough. Here's your retest, here's your failure. I'll take your trade. I'm not getting long right here. I wait for it to move back out of the volume event, right? Because this could easily fail. So that's why I demand in my trades for my conservative setups that it gets the full ATR, that it comes back, that it retests and then gets back out, and then that's a much safer entry than just waiting for it and then getting in right when it comes back to the zone, because I've learned the hard way. So all my rules are based on watching millions of these setups. It feels like millions, right? So I learned the hard way. I'm like, oh yeah, okay, that showed the ATR, that's good. Okay, I'm gonna hop in right here. And then it does that. So it's like, if it can get back out of here, that confirms to me that this is a bullish event, right? So that's what I will wait for there. Let's look at the bigger picture here. So that event happened. So this does look like an ISI trade. So this event is in this inflection zone. Something that happened here happened a while ago. So you can see this was the bottom. There's different things that happen here, but first and foremost, this was the bottom of this balance area. Right? And then you had some directional conviction there, tail, gap up there. And then this actually was another balance area that it broke down from. So this zone is still valid as far as an ISI zone. You know, when you trade up and through the zones a bunch of times, then I erase them, right? So this is also important from recent things. This is where this market gapped up from. So you can see things keep happening in this zone. I just showed you all the stuff from there, and then this is recency, very important. This gapped up 20 something, close to 20 cents, right? Gaps are directional conviction, one of the 4 important areas of charting, right? What I could do here is I could have widened this and incorporated this directional conviction too, which I'll do right now. So let's, and guys, you can obviously draw these yourself. So I give these to my room every single day. So you don't have to draw them yourself. Another perk of my trading room, where and these zones are ridiculous. If you just traded Izzy zones, you could make a very good living trading, right? So there's my trading room and all my incredible, awesome traders in there. And you can see it posting. This is me yesterday posting. This is where I got long in ES trade, but this is a great resource to have. And then I post, here's where I post all the zones, right? So you come in here and whatever market you want. Not sure why that's not loading. Right? And then you can blow this up and open it up and then draw and put my zones on your chart. I'm not sure what's going on with my internet. I'm sure it's something to do with this YouTube stuff. Anyway, there's your zones, right? So another perk of the trading room. All right, so anyway, this volume setup occurred in an Izzy zone. So if this moves back out of here, what's my entry? Because this isn't, remember, Izzy trades are aggressive entries. Entry price is $85.50. Based on my risking 5, I can only put on one contract. So there are micro grain contracts. They're very thin traded, so you're going to have a lot of slippage. But if you don't want to just trade it, I highly recommend you just don't put one contract on in anything. Trade the micros. This is a little different because it's just not. It's not like the MES or the MNQ where it's very liquid. You know, I like to be able to get out of at certain places, right? So let's take a look at the other thing that I look at. So if I were to get long here off of the setup, say this does hold, and we're at the blue lug, and that's inherently bullish right there. Not bullish, but this is great support. And if it doesn't, that's telling. If it breaks and we build new lugs, that's telling you something too. But these should hold. So say it started rolling up. Well, this is an area that I would get out of some if it struggled. VWAP confluent with the yellow lug. Well, if I only have one on, it's all or nothing. So then I get out and I'm done. And then if I watch this thing rip, that sucks, right? So that's why you want to have multiple contracts. There's nothing wrong with trading micros, guys. Nothing, right? While we're on here quickly, these again are Ludwig levels, the second most powerful thing I've ever seen in my trading career. This is our website. I got to put that on that sheet too. Ludwig levels. If you want to try them out, she's got a 3-day trial. Put your name in the comment section. Say you saw it on the Bookmap webinar, and she has special pricing. And then you can get these instruments. She has more than this too. I don't know why she hasn't updated this, but you can get like soybean. You can get almost everything. Futures product anyway. So that's that, and that's these, and they are ridiculous. I can go through any of these markets and show you how ridiculous they are, bouncing out like this one bounced off. ES bounced off the baby lug earlier. That's we call them the minor lugs, or major lugs are the red and the blues, right? So not only do you use them for support and resistance, you use them for thesis wise. You can see this keeps bouncing off the yellow, which was probably prior red, right on top of it. Let's see. These lugs have been formed for a while. So the long, what she says too, if you guys watch that webinar I did with her, I post it every week. If you guys need it, let me know. I'll post it again. But the longer the lugs are still there, the bigger the move when it comes out, when they finally break. So you can see this yellow was prior red, or prior blue, I should say. Let me get this out of here. So use them for support and resistance. I use them for support and resistance, and you can use them for thesis as far as how they're reacting once you build new lugs, so on and so forth. So this thesis right now is this can't get above this yellow lug. So, and it still hasn't tagged the blue. Then you can judge when we get down here. So one of the trading setup is the actual slug, a stop run into the blue lug. That's actually the highest percentage trade that we have so far. So that has not occurred yet, but keep an eye on that. Right, so this is exactly why I wait for retest failure. So if I was waiting to get long here off of this is NASDAQ, back to NASDAQ. This was that setup that I drew here. There, you did get your ATR. Here's your retest. It just melted right through there. So I would have never been long. I wait for that, and then that for my conservative entries. And like I said, there was nothing aggressive here to where I would have been aggressive right out of that zone. And then this is actually the first retest of this zone in ES. Here we go. And you can see what else is here. Spot gamma levels. So these are really important too. So I will take this barf. I will take that trade. It's been a while. That's moved pretty far away from this zone, but this is the retest. If it moves back out of here, I'm going to go long. And I still have this zone in here. The only thing I have to change, my ATR, potentially.
Goldman
So this was
Sachs
the zone.
changes the Bank of England
This was the zone that
and sees
made me
50
miss.
basis
I was
points
doing
of rate
this and I missed that
hikes in
Nasdaq
August.
trade, so that hurt. Like I've been saying the entire webinar, I told you I was going to bitch. 4.79 is your ATR. So this obviously got out of here, the validation price, way out of here. And now it's back to the zone. So now if this moves back out, I can go long at 425. I can put on, I'll round up, 8 MES. Hold on a second here. So I'm just risking. Everything is set to what you want to risk. I'm risking $500. I'm risking 10% of the Apex $150,000 loss limit. It's $5,000. Again, if you're trading a real account, you should not be risking more than 2% on your trades, or you're going to have a bad day. 100%, you're going to have a bad day eventually, and you're going to blow out your account if you're risking 10, 20% on trades. I'm just telling you. If you want to learn the hard way, be my guest, but it's going to happen. All right, so I'm going to enter this trade. This is the equity BARF, so that's number 62. I'll try to answer some questions here too, because I've been chirping for a long time. So 0450, 04 quarter, I will be long. This is a little bit of a delay. You don't usually see this much time pass without another volume setup. There has just been nothing. This was this. Here's your way more than an ATR. So this is another example of, so we have a trade in my room that's actually takes advantage of a 1 ATR and it comes back, a 2 ATR comes back, or a 3 ATR comes back. I've been saying for years that these retest these zones 70% of the time. This is a perfect example is we just don't know how far it's going to go before it finally comes back to the zone. Most of the times the 1 work great, the 1s and 2s work great, especially in equities. But sometimes it'll go 3, 4, 5 and then make its way back. Right? And this is a perfect example. So this did retest the zone. It just hit 5 ATRs before it did.
Go up
See
a
what I'm
bit
saying?
further.
The point is, the markets come back to these areas. It's crazy how often it happens. Right? So anyway, this is the multiple ATR, retest failure. I'll take the long. Actually, I can take the lick long too. There's still liquidity up here, so this is another trading strategy. So let me get that in as well. That's number 58. Why am I doing that? Well, because one thing you learn from all my webinars, even back to when I was trading stocks for Bookmap, this liquidity, longer term liquidity, they're magnets. And they can't be real happy that they didn't get filled right there either. Right? So this is the big money. The big money will eventually push the market into their orders. This is pretty shameful that they couldn't push this market into their resting orders up here. So like when this is the game that I used to play. Like I tell you every week, like I would have like 1,000 lot here. It wouldn't be this far away, but then I would wait and I would start buying like right here. And as it got closer, I would just step on the gas with the remaining contracts I could put on. And people would see me a flurry of buying in the dome and they would jump on my coattails and they push it right into my offer. So my point is for these, whoever this liquidity was that wanted this fill, for them not to push this into this, that's pretty sad.
Prior
They couldn't do that, but
1.554
I would have
million.
definitely used all my bullets to push it into my,
forecast 1
get it
million
into my
on the
order.
prior
But
2 spot
that's the game.
1.3
So anyway,
million.
there is
Gasoline
some of it pulled,
inventories,
but there's still
forecast
liquidity
0
in
spot
here.
8 million on the prior 2 spot 108 million. Kansas City
So is this
Fed
guy
Composite Index
talking over me?
-5 on the prior
Can you guys hear him
-1.
talking over
And
me, or is it
Kansas
just
City
is it
Fed
quiet?
Manufacturing prior -2.
I think with Bookmap, let Scott know he could use a filter for his mic and the OBS
Bear
for
in mind
audio.
that
Ducking will lower the
yesterday's
volume in our
US
audio on the
API
stream.
crude
Really?
oil stock
Did not
change
know that.
came
Thank
in
you.
at
I think Bruce would have told me that, so another F for
-1.246 million.
Bruce. I will check that out. I appreciate that. Actually, let's take a look. Here's the awesome software. So you say OBS for audio. I don't even know where I would do this. If you can expand on that, that would be very helpful, and people don't have to hear everything amplified 85 times over me. Because I want to turn on my tick strike too, and I can't do it because it goes just crazy when I'm on these webinars. All right, so I'm filled on this long NES. I'm filled on BARF and LIC. The BARF, again, is just any volume event, ATR or multiple ATRs, doesn't matter. As long as nothing new came in, which it didn't, ATR, retest failure, and I took the LIC trade. There's still liquidity up here, so I'm playing for that. So the LIC trade, I'm just playing for the liquidity, and then I'm out. You know, if it blows through, I can judge. Then if it just blew right through there, then I'd be like, okay, I'll put my stop right there, and I'll see if we can go higher. Speaking of which, let's just do a quick trader map and see what this looks like. This is one of the newest things on Bookmap. So cool. Trader Map Pro. Create. Hit add. Their filter. I want to see order size filter, so I want to see the order size in the book. You can just Google Bookmap Trader Map Pro, and you can learn what all these are. This one I'm going to put, I want to see any size. I only want to see the size, let's say 250. I mean, this doesn't matter. You can make this 10,000 if you want. We'll just say 250 to 1,000. I'll watch what this does. Play. Now it's going to build. But what you got to do right away, and it's going to give you this warning. You got to turn off your MBO, your SI stuff. What does that mean? I'll show you what that means. So this is this right here. See how there's nothing here? So this is just showing you that, well, first of all, this is showing me there's no 250 lots in the book, which is nuts. The old days, there was 2,000 up. Today, you can't even get 250 up. But go in here and uncheck this, and uncheck this subchart and the on chart. All right, so I'm going to have to adjust this because obviously there's not a single 250 lot resting order in this market, minimum. Oh, here you go. There you go. There's 800 down here. So that could be really good information, right? This is the biggest order. This is the biggest player. The biggest players usually get their way. That's quite a ways away, obviously, but keep an eye on that. So let's change this. Keep an eye on that price and what happens in the next few days. I'm not saying we're going there. That would be nuts. First of all, it'd be nuts if we can even sell off 20 points, let alone 200 or 120. All right, so let's go back here. Or do I have to do it on the other one? Hold on. I think I got to do it on the main page here. Why does that happen? They came out with a new version. I haven't had this new one on, so I can't remember exactly what to do. Actually, we have a webinar in my trade room that we went over this with the Bookmap. Let's change this to 100. So there's got to be some 100 lots, right? Let's see. If there's not, then this is really pathetic. Then it's just literally all algos just whipsawing people. All right, let's bring this back. All right, really not a ton. I mean, look at this. That's sad. Anyway, there's 100 lot here. And that's right where we're headed. They get their fills.
At 11 a.m. Eastern Time, we get weekly EIA.
All right, so I'm long off that bar setup, so I got to get my stop in.
0.45 million on the price 7.919 million, with a range of 2.5 million to -4.
So there's a way that liquidity could get filled, and I still don't get stopped out. So that's
prior 1.554
so
million.
I entered at 4.25. I'm out at 90.5. I'm risking 14 points. Guys, this is not negotiable as far as I'm concerned. I don't care. So this changes obviously with the ATR. So if the ATR were 13, say it's after a Fed meeting or something, watch how this changes. Now I'm risking 33 points on a trade. I can only put on 3 MES. This is what you change your contracts. You don't change your risk. The market doesn't care what you want to risk in points. Right? So many people are like, I got the static. I like to risk 3 S points to make 6. Well, you're just opening yourself up to algos. Like, that makes no sense. I'm adjusting. This always remains constant. I'll adjust my size. So with this current ATR, I have to risk 14 points on this trade. I could put on, round up, 8 MES, right? That's what you change is your size to be able to risk what you want to risk, not how much stop, just placing your stop orders in meaningless areas, right? So say you got long right here. I like to just risk 3 points. Well, guess what? You have a very good chance of getting stopped out just on the normal algo rotations. Stop doing that. I force these markets to get, again, we're long. I got long at looks like the exact tick pretty much, as usual. I got long there. I force it to come back the ATR, get through the volume event, push out another ATR, and then you stop me out. Great, you win. On to the next trade, right? That's what I demand. I do not get in and risk 3 points. You just get stopped out on random rotations. Stop doing that unless you like giving your money to algos. All right, so my stop for this is, what did I say, 90 half? All right, so I got to put that in because I always forget to put my stops in on these webinars and it costs me a lot of money. 90.75. I have barf and lick on, so those are both resting. Or working, I should say. All right. Let's see what happened with soybeans. I forgot about that trade. All right, so I was waiting for a retest failure of this volume event. Or actually, this was an Izzy trade. I was just waiting for it to get out of here aggressively, and it's never gotten an ATR out of here. So now, technically, this could be a bearish setup now too if we get the ATR this way. But so the way I work these, if this gets an ATR below this zone, the invalidation price, it invalidates the long setup, and I won't take a long. So let's see what that is. And this is where you got to stay on top of your ATR as well. So with that ATR, we'll double check it, but the invalidation for a long, everything's right here from the spreadsheet, guys. All you have to do is enter your zone prices in the ATR, and everything populates for you. What you're risking, how many you can put on, the validation price, the invalidation price, it's all here. 74. So if that market touches 74, which is close, then that long idea is done. And technically, this never did get the ATR out of here at the time. Remember, we were saying it missed it by a tick? So I could take a short off of this setup. What do you see here? Well, it's definitely liquidity. So I can take the barf short. Again, I need to see ATR retest failure.
Fed's power says labor
and I can take the
participation has
liquidity
moved
short.
up more
Two
than
different trading
forecast.
strategies. And I'm playing to that for the liquidity. So let's see what happens there. Think with Bookmap, if you can expand on how I
1 minute remaining. I'll lead
filter
with the
my
EIA
mic
crude oil
in the
inventories.
OBS, that would be great. That would be very helpful for me. Because I want to turn tick strike on because it... All right, let's just turn it on. If it gets really annoying, let me know. But this helps me know what's going on in other markets. It lets me really know what's going on in these stocks, or I mean the futures, because I have the FANG stocks. And so this is tick strike. Again, everything that I'm using, guys, is on my website. You get discounts to everything I'm using. Go to my website. It's all on the home page. All right. Here's Bookmap. You get discounts to Global Plus. Highly recommend you get Global Plus. If you're on Thinkorswim, you're not getting anything. I don't think you're even getting the SI indicator, but Global Plus gives you the sweeps indicator. Here's your Apex. That's the Pulcini 50. Should have said my... Yeah, right there. There's your code there. Spot Gamma, there's no discounts for that, but if you do the Hero, we'll take a look at the Hero here too. You get an extra week for free. Speaking of which, let's just take a look here and see what that looks like. Spot Gamma is very important. He does complete analysis on the options complex, which is a huge driver of the futures because these dealers have to hedge themselves with futures. So if you can understand what's going on,
that's lower than the forecast of -5.
so you can see they're starting to buy these FANG stocks. So these stocks are the highest weighted stocks in the NASDAQ and ES. If they're rallying, the futures are rallying because these are the stocks that comprise the indexes that comprise the futures.
Draw on the forecast of 1 million.
See if
Crude
I can at
Cushing
least get back to
inventories
my entry point in ES.
-0.098 million,
Hey, all right,
-0.098 million.
back to entry. What happened?
Still
Bounced
waiting
off
for
this
the
zone
Kansas City
again.
Fed manufacturing
There
data.
still hasn't been a volume event this entire time we've been on this webinar, so just waiting for something there. Anyway, back to Euro. I just want to see what this looks like. Let me turn this down too, so it's not overbearing. Sorry, I have it on almost mute. I guess I don't need to hear it. We can just watch it. I turned it off, but I like to hear it. That's the whole reason I used it in the first place. Speaking of which, like I said, this down here. Here's your discount for that. Discount for Traders Sync to journal your trades. Highly recommended. This is the best one I've seen. All of these have discounts. Just click on them. But I use the tick strike. Initially, I've been using it for like 15 years now. It would let me know I can hear if something else is firing off in the other markets because I can't watch 10 markets at a time, 15 markets at a time. So I can hear when they're going off though, right? And you set different sounds for different things.
More rate hikes coming, but with more data. And we don't want to overdo it.
So is this guy talking over me? Could someone let me know in the chat, please?
Also, did see oil
That'd be
prices
great.
edging lower after
If it
EIA
is, I'll turn them
data
off.
showing surprise
I don't think
draw in
anything's
crude
really
oil
going on right
inventories.
now, so I can pretty much turn them off.
So that's in crude inventories.
I think he might be talking over me until I learn how to do the microphone thing. All right, so that's muted right now. All right, let's see what spot gamma looks like here. Where's SPX here? Hold on. It should give me a list of my products. What am I missing here? Oh, it's down here. Sorry. All right, SPX. Let's see what this is set at. So let's turn it on the day and see what this looks like. So again, you can see with this, all the options trades, turn that off for a second, next expiration, this is what's been driving the market here. And you can see this is starting to move up, right? So these guys are messing around with these short dated options. So if they buy calls, dealers are short calls, dealers have to turn around and buy futures. It's, that simplicity that you have to look at it. Trust me, this is not simple stuff. If you read some of his stuff, like his commentary, the guy is a brainiac. It's great information. I try not to get too complicated with my trading. But anyway, you can see the zero date to expiration is rallying here. And then you got that on top of these stocks. So what are futures doing? They're rallying, right? All right, so again, I'm long here. Let's take a quick look on where I will get out of some of these. So the number one place I'm looking at that I would get out of at least half is what? Yellow lug. What do you got at yellow lug? Well, it's yellow lug. First of all, it's extreme standard deviation of VWAP. Those two are enough for me. It's real close to, well, it is point and control of this current market profile, which it just bounced off of a little bit ago. So there's like three things up there that I will watch closely. If it can't get through there, I probably get out of 3/4 of the trade. I'll always leave some on for the bigger move. The bigger move is red lug and or an opposing volume event that turns bearish. Then I'll get out of the rest of the trade. Right. So this is my target for right now. This is daily value area. You could get out of a few here. I mean, it's 4 points in my favor. I'm not getting out. I'll see if we can get, especially this is where you want to use tick strike and the market pulse as well. And now we can get into market pulse, and I'll show you guys some ridiculous examples where you can use. So market pulse is like it's tick strike on steroids, and they've come out with so many more things. But I've seen so many new patterns. There's going to be a new course on this. There's some examples in my trade room of how to trade this, but you can see here. This is a good example of this morning. So I have this set at an hour. So this is showing me the highest buying or selling for an hour, right? And you can see this is why you want Global Plus too. It's showing you somebody swept this market, 3,500 sweeps. That's pretty important information to know. I don't know if you can get this information on
Crude
this.
stop sell CL 311 contracts.
I don't think you can get that information on a bar chart. No, you can't. I'm being sarcastic. This is the information, guys. So the point is, you can see here, these sweeps came in. The market moved a little bit away from here, retested the area, and then gone. Well, why? Well, just think you got the sell orders in the order book here, and someone comes in and swipes you. What are you thinking right here? Oh shit, I'm toast. Please come back so I can get out. Here's the return to the area. Gets back out of there, gone. Guys start puking out their positions. That's what happened. Look at this one in gold. Another great example. So there's continuation trades. This would be a continuation trade based on market pulse. I'm not talking about my SI indicator setups. I'm talking about market pulse. These are more like scalp trades. I mean, this one turned out to be a whopper, but they're more because things can change quickly. But you can see the sellers never came in. They still haven't come in here. I mean, look at this market. There was selling early on. They tried to sell it here. They tried to sell it here. These sellers were off sides, right? They thought they had it, not so much. Right there's some sweeps. You can see the selling. That was the most selling in an hour. That's what triggered the buy ice. So somebody absorbed the selling, and then someone came and swept
Crude
3,500
stocks
contracts.
stocks LCL 173
You think
contracts.
that's good information to know? It's the information to know. That's why I'm trying to tell you every webinar. That's why I do these webinars. This is the information. This is the best edge you'll ever have in trading. If you're not using this information, you don't have all the information. I don't care how great of a trader you are. You don't have all the information. If you had that, you can be an even better trader.
333.
All right, so I'm gonna get out of a couple here if this fails at the spot gamma level, just because I can't keep an eye on this on top of it. I got 8 on. I'm gonna get out of 2 of my. I'm not getting out of my lick. I'm just getting out of barf. So I got out of 2 there because see how it's failing. See, that's where I use these red bubbles. So I got the bubbles. It's starting to fail here. These are one of the areas. Look, this is also available in my trade room. If you come in my trade room, you have to have this tattooed to your forehead. But you can see number 5. I'll let you put it on your thigh too. You don't have to put it on your forehead, but it's got to be a real tattoo. I pay myself as the market makes money available to me. This is a 7-8 point winner, right?
Crude stocks LCL 193 contracts.
It's collapsing. And we can look at a market pulse example live. What's that? No, right, spot gamma level, right? So that's a place I will get out of a couple. I didn't get out of the full trade, but I got out of a couple. I'm paying. If it just ripped right through there, that's why you want to be keeping an eye on your bubbles. If it ripped right through there, I don't need to get out. Somebody came in selling it. I got out of a couple, right? I don't need to let this come all the way back. Now I'm looking at I didn't get out of any of my lick trade. The lick trade is literally the trade. It has to get to liquidity. It's do or die. It's either liquidity or stop out. But the barf trade, I got out of 2 here. And then we know this area is important by the yellow lug. And I'll get out of probably another half as it gets up there. So keep an eye on that. Let's see what's going on in crude. And then I'm going to show you a market pulse example from gold this morning that I actually traded. Speaking of which, did I ever get stepped out of that trade? I did actually. I think I heard it. Yeah, stop me out to the exact
hit stays high during Powell's
Okay, went a little lower. All right, we'll come back there. I don't want to hurt my brain with gold right now. There's a lot of stuff going on in crude. Well, that was the number, right? I thought the number came out at 9:30 on Thursday. I guess it's 10 o'clock. That had to have been the crude. Yeah, that's what that was. All right, so let's see, first of all, where we're at in the bigger picture. See if we have any IZZY trades, potential IZZY trades. This is still on the bottom of this IZZY zone. What's this IZZY zone? 2 buying tails from the other day. And I remember this distinctly because I got short here and I got smoked. Buying tail, launch. IZZY zone. So I will take, if this last volume setup holds, I will take them long aggressively. And you can see, look at the, so of course this market pulse is going to spike on stops, but there's going to be times you're not seeing any stops in the market. That's really important information, right? I mean, someone's being very aggressive. Like these are just guys puking. But let's just turn this off and let's do our normal. You know, this is the core of my trading is the SI events. Yes, the market pulse is awesome, and I'm going to be using it more, and I'm going to have trading strategies on that. But this is the driver of all my trades. So you see, there was 300 stops there. That held. That was a stop and hold. Then you had another 195. That held. And then you had another 197. So what I'm going to do, I'm going to combine these last 2 because I just want high concentrated volume areas, right? And then I can judge by how it reacts to these areas what is very likely to happen. Likely to happen. Trading is probabilities. Nothing is 100%. Nothing. If someone tells you they have something that's 100%, they tell you it's 90% or even 80%. I still, I get emails all the time. I got a scalping strategy that's 80%. Okay, well, first of all, what are you paying in commission, right? And I highly doubt it anyway, especially if you're doing it by hand. Maybe if you have an algo that does it, maybe scalping-wise. But if you're position trading, you're not 80%. It's just inherent. You can't be 80% the way these markets trade, right? If you are, you send me your results for a year, and I'll do a backflip for you. How about that? I'll do an online backflip. If you're an 80% position trader, let's see it. Because I don't believe it, and I get emails. I don't even believe you're an 80% scalper, to tell you the truth, not over the long run. And even if you are, if you're paying $3 to $4 around turn, you're still not going to make it. Maybe if you're part of a trading firm, you get rebates. That's about it. All right, did I do this right? So, I mean, you could incorporate this one too. I don't think I need to have a 40-point zone here. I'm going to incorporate these last 2. You can even just, if you want to, this is where subjectiveness comes into play. Most of my stuff's black and white. But you could just draw that. I'm going to draw these last two, this one and this one. So you have 400 stops. That's 400 contracts somebody's loaded up with on the other side. That's what we're taking advantage of, I should say. 69.95 down to 69.69, I think. Close, let's see. Did I do something wrong here? You want it? 69.70. There you go. That's that stop run, right? That's that spike there. And I incorporated the first one too, or the second one, I should say. All right. So let's put that zone in and we can trade it potentially. 69.95 down to 69.70. Go to your spreadsheet. Again, please don't email me asking for the spreadsheet. You need to be part of my trade room. The spreadsheet is worth its weight in gold. Like, this is, you guys have no idea how much time this thing saves me nowadays. Thank you to Jay Labrada for, I had the basic spreadsheet. He's really enhanced it and brought in the reversion trade. That's the second part of this. Let me put this in first. 69.7. Oh, I'm sorry, that was the top. 69.95. I put in the wrong value there. 69.95. 69.70. 27 is your ATR. 27.4. 0.274. It just means it's rotating about 28 ticks every 5 minutes. But this is the second part. This is the reversion strategy I've been talking about. He's really developed this for us. This thing is incredible. So if you want to take the ones, here's your prices. The twos, we talked about the different ATRs that it can get to. There's sweet spots for each market that we're still it's still a work in progress. But I do know the ones and the twos are the best for equities. And like if you're trading grains, bonds, and natural gas, I only trade the threes in that. So each market, it's just like these thresholds, right? Each market has its own personality and its own volatility and its own volume thresholds. All right, so I know we're in an Izzy zone. Let's see what else was down here. Maybe we have a slug. Check our lugs. Got to refresh these puppies. I'm sure there's some new ones here. There you go. No slug. So this is a way you can judge, come up with a thesis just on the lugs. So I have different ways I come up with thesis. Bar charts, market profile, lugs. Well, this lug is telling me blue is more likely than red. Why? We talk about this on the Pamela Love webinar. I posted that last week. If you guys want it, let me know. I'll post it again. When you form new lugs, if this market is going to be bullish, from here on out, it should hold prior blue directional yellow. It did. Well, it should have gotten red. It didn't. Now it's back below yellow. Now you expect blue. Right? So that's one of the ways you can come up with a thesis. It had its chance. No go. Back below directional yellow. This is what you expect thesis-wise. I'm not saying it's going there right now, but you can expect blue before red thesis-wise. I'm just saying. So what's with thesis? Well, thesis doesn't mean you could just trade one direction and eliminate one side of the market. I'm a day trader. I trade both sides. But if I start getting setups that are bearish, just based on lugs, if I use my lug, I can trade bigger size
Fed bids for
to the short side.
total
Right?
$792.7 million.
Hold on, I thought I muted this dude. All right, he's muted because there's really nothing going on. I don't think. Hold on. Yeah, there's nothing. I don't want him drowning me out. There's really no news coming out unless something actually happens. But we're always last to know anyway. The market moves 30 points, and then you hear what's going on. So that's that. The other thesis I use is market profile. What's going on here? Here's today. These composites are extremely powerful, right? This was the most recent. What did it do? It opened up in here, tried to get out, got back in, could barely hold point of control. So the market's in it, you expect the other side. It couldn't get to the other side, breaks down. So this looks bearish to me. Now it's accepting in this one. What do you expect when a market accepts in a market profile composite? The other side. So if this holds here, my thesis for this is bearish. My thesis for this is bearish. My thesis for my bar charts are not bearish yet. If it gets through this, this inflection zone that we're currently in, I'd be bearish all three things. I can trade 2 times size. I could trade 3 times size if I want. Remember, If you're trading normal, real accounts, you should not be risking more than 2% on any normal trade. If you love a trade, if it's an A+ trade, they call it, meaning your thesis aligns with the volume events for me, I could trade 4%. I could trade even 6% of my account size. That's my daily limit though. So if I'm not sure on a trade, fine, take your shot. If you're wrong, you're done for the day. You've got to shut your computer down, and you should have a broker that'll to do it automatically for you. If you don't, find another broker where if you lose 6% of your account size, you're done for the day. You can't lose 10, 20% of your account in a day. You're not going to make it. I ramble on that every single day. All right, let's see what's going on here. So that was a good area that I got out of a couple. It looked like it bounced there of this ES long. I'll go back to crude here in a second. Right? This is why I did it. I paid myself as I was correct. This is like a 7-point winner. I started to see the sell bubbles. I got out of a couple. Doesn't mean it can't do that. That's fine. If it does, great. I still have 6 on. But if it turns around and sells off, at least I got out of some up here. Right? Other than that, I'm just waiting for another event. I'm waiting for another event and or yellow lug that we looked at earlier. So just let them. Guys, this is the exact reason. So here you are. Say you got long with me. Say you were mirroring my trades, which you should not be. You should be doing this for yourself or learn how to do it for yourself, aka my trade room, right? And you got in, you're like, okay, yeah, all right, I got 7 points. I'm going to move my stuff to, I want to make a little profit here. I'll move it just above break even. Yeah, guess what? You just got stopped out. Why? Because you got algoed. Don't get algoed. Put your stop below the volume event. This is what the algos thrive on. This is why algos are here. They're taking your money. They're taking the bad trader that doesn't want it. I don't want to, I had 7 points. I don't want to take a loss on this now. Guys, please, I'm begging you, stop getting algoed. The analogy I always use is, you have your wallet, do you just turn out and throw it out the window? It's like, take this, seriously, and take your money seriously, your trading money. If you're sitting there trailing your stops in random areas, you're gonna get stopped out most of the time, right? Yeah, you may get lucky once in a while, and it goes, and you trail, and you trail, and you trail, and it comes back. You got out, and it does that. Yeah, once in a while. The majority of the time, you're gonna get in, you're gonna see this, and you're gonna like trail your stop and whatever, and you're just gonna get algoed, and then it's gonna go, and then you're sitting here stewing the rest of the day. Then you get pissed off, and you start doing stupid stuff, and then instead of having a winning day, you have a losing day, and all of a sudden you're in a 2-month slump. That's how easily this stuff can snowball. Stop getting algoed, please. If you learn anything on these webinars, get your stops away from the nonsense where nothing's going on. All right, this is still in this zone. This is crude. We're waiting to see how this breaks out of here. If it breaks out of here to the long side, it will go long aggressively because this is an Izzy zone, like I said. My thesis is pretty bearish right now, but it's still in the Izzy zone, so I'll take it, make sure this is correct. This is up to 28 now, so I can go long at 70.27 based on my risk parameters, risking $500. I can put on 6. I'm going to round up. I'll put on 6. I'll go long aggressively. That will be invalidated if we get an ATR below that volume event. Then I'm going to cancel my long, and then I'll look for shorts. All right. Throw your questions in, guys, because we've got about 10 minutes before I hop off here. I need a breath anyway. So if you got questions, throw them in the YouTube, please. 70.27. So think with Bookmap. Teases me with how to fix the OBS, and then he doesn't expand on it. Hopefully he will expand on it. How about a naked backflip holding a dead squirrel inside a Walmart? Okay, that's a little specific, but sure. I forgot what even the bet was. Why did I say I would do that? I can't remember. But yeah. Tell me why I said that. All right, so he's just trying to break back out of here. Again, I'm watching. The only other place I'm getting out here is if I getting out of more, I should say, is if I get an opposing volume event. And this is, guys, this is liquidity you don't want to pay attention to. This is just games, right? This is not someone just throwing in size trying to scare the market. I don't pay attention to liquidity. Liquidity I pay attention to is that's been in here for a long time. That's my target for my liquidity trade that I have on long. All right. All right, wait for that. What else were we watching? Soybeans. All right, so this obviously is a bearish setup, but but it never retested. Or did it retest? Yeah, of course it did. Let's see. Yeah, there you go. Maybe. Let's check our prices here. I think I missed a trade here. That would be my second one of the day. And they're always huge winners if I miss them. That's just how my trading life has always worked. 3.78. Well, at the time it was 4, so let's see if that retested that zone. So the short, it needed to touch 74, and the retest price was 77.50 to make that a bearish setup. So it did touch 74. Yeah, no, I never got anywhere close. So it's still in play, right? Kind of like I took the ES later, way after, like after it moved like multiple ATRs. I'll still take that if it does that, and that. And I would put on the bar from the lick. I really hope that happens because I want to put on this lick trade because you know this is going to get filled. Because they're the big money, and they will make it get filled. Let me show you a market pulse example real quick from this morning that I took, since nothing's going on right here. So we'll see what these look like. Obviously, these are all the stop runs, so you're definitely going to see the most selling in the hour. So this is market pulse. Here's my settings for that. I will have a course for these setups. I'm still working on it, but I'm seeing incredible things, just like I see with the SI indicator. It's shorter term, and all you guys want to scalp anyway, so it's like, that's all I hear about. How do I scalp? How do I trade off the dome? It's like, you don't, unless you want to lose. But market pulse is a different story, different animal. So anyway, these are my settings. These are all default. It's already set at 70%, so this is just telling me if it's hitting based on my trading period. My trading period is how long I'm looking back for these events. So I have mine set at an hour because I only want to know the biggest buying or selling for the last hour. So if this hits 70% of the highest buying or selling in the last hour, that's when it will spike on my chart. Right? So look at this earlier in gold. The market pulse is part of the SI or the MBO package right now. So where you get that stuff, you just go to their Bookmap marketplace. I think it's part of it. I think they're going to separate it because they're going to have different data sources for it. You don't have to use Rhythmic going forward. I don't know when that's happening, but I just had a meeting with them yesterday, so that's going to be cool if you're going to use like a different data provider. I believe it's in here. Let's see. Yeah, look at all you get for this thing. This is worth its weight in gold, guys. You want to cut costs wherever you can cut costs. You don't cut costs on the most important thing in your trading. Sub chart, on chart, Trader Map Pro, Market Pulse, all part of this MBO bundle. Like this is it. This is the edge. There's no bigger edge on the planet than this. I don't care what anyone says. This is what drives markets. All right. So anyway,
crude stops LCL 220 contracts.
All right, so we got more stops in crude. I'll go there in a second. So take a look at this. Right. So just use your common sense here. That's how I trade.
Stops LCL 179 contracts.
So now I'm really bearish crude, right? Like now we're through this Izzy zone. We already looked at the market profile. We already looked at the lugs. I mean, this is close to this next Izzy zone. So I mean, but I'm still bearish. But I mean, I would still take an aggressive long out here if it bumps off of the zone. But this is why I let the volume events tell me what I'm going to do. Like if I'm just staring at a bar chart, I'm like, yeah, I'm going long right now. Well, I'm going to let this volume event tell me if I should go long, right? That's the key. And I don't know if I mentioned this is the best edge in trading, so that's what I'm going to use. Hold on. So this was 400 stops right here. See the spike? Turn your bubbles off. Last price line shows you actually traded price. Get your horizontal line. Find where that spike started. So right there. The sweep started right there, and then it came around after that. Sweeps cause the spikes many times. Someone sweeped in the order book. Came down to there. That's your zone. Let's color a different color so I don't confuse it with the last zone I drew. For stops, I used yellow and white. Just help me know what kind of volume event it was. Then we have specific setups, 2 setups for stops. The Dumb and Dumber, the Dumb Money Puke that rejects immediately, and the Stop and Hold. Obviously, these setups down over here were stop and holds. Meaning you got stop runs, and then the big money came behind it and helped push it down. And how do I know there's big money behind it? Well, first of all, if it pushes down through there, the big money's pushing it because it's just not the retail trader. But if you look at your relative volume, which you guys should all have this type of chart, look at the relative volume that's coming in here. Right? This is where you get big moves. When you get no relative volume, you get chop fest. You get chopped to death by algos. When you get the big money coming in, that's this. So this bar here was over 5 times normal volume, 500%. That's significant. And then you add 200%, 200%, all in this area. This is big money unloading. That's where you get big moves, right? That's very important information. And that's why these stop runs, guys are puking. That's part of the volume, obviously, but then there's still volume behind it, and that's why these stop runs are coming in and holding, going lower, holding. All right, so let's put this zone in. So the only trade I've done today is that ES long. But, you take what comes at you. If it's not there, you don't force it. I'm not forcing anything. I'm waiting for my volume events and my rules. 69.50 to 69.41 is your zone. ATR in here is currently up to 29.1. There you go. So now I wait to see how this develops. If this gets up to my validation price, to make it a long, it needs to touch 79. To make it short, a short setup, it's 69.12. Now I wait. This is right at the top of the Izzy zone. So I could take this long aggressively, meaning the minute it breaks out of here, that would be at 69.83. The problem with that, as you can see, I do my best not to enter into prior volume event. So if I do go long this, I'm going to put my stop up here. Even though this was a prior volume event from the other stop, at least I'd be out of those last 2 stop runs that we drew the zone for. So it should be 83. I'll move it up to 96. So I'll risk another 16 cents. So I'm not entering smack dab in the middle of that zone. I don't even think it's going to get up here. I think this, based on that relative volume we saw and the thesis stuff, I think this market's going to get smoked. But you see, I'm not short yet. If this market's bullish or bearish, this volume setup better be bearish, and then I'll trade it. And you can see what's below here, and all that's going to get filled. So I could trade, if this holds, I'll trade a barf short and a lick short. Lick is to the liquidity. All right, so this may turn. You see how I'm waiting to see? I'm not just jumping in here. I'm okay. Show me what you're going to do, and then I'm going to trade it. We already know the aggressive entry is at 83. I'm going to move it out of that zone, so I'll get long on my Izzy trade. That's this trade, the inflection zone trade. Right there, that's an aggressive entry, meaning I'm getting in the minute it breaks outside of an ATR to the upside. We just looked at that price, so I'm going to move it out of that zone. So I'm going to I'll put on 6 since I'm not going to round up here since I'm actually getting filled at a worse price. So 69.90, 96, I'll get in that. That is the Izzy trade. All right, so that is working. So I still need to see 79 to make this a bullish setup officially for other strategies, or 12 to make it a bearish setup. So the Izzy I'll get in aggressively. Other than that, I need to see, what did I just say, 79? 79. So to make this a bullish setup, I need to see 79, and then I can trade a potential barf, but I will put that out of the zone, entry out of the zone as well. And I don't think there's any lick close to here. There was liquidity above there we saw in the Trader Map Pro, but that's way up there. I mean, you could put on the lick. You never know. Crude could do anything. But you got it. If you're putting on a lick, you can't get out until it gets to liquidity or an opposing volume setup, and that would be quite a move. That would be 400 points straight back, or 400 ticks straight back up, $4. Could happen. Not likely. All right, so waiting on that. Let's see what's going on with the ES. Looks like it's pulling back again. Hold on here. Oh, I'll show you gold here. One more. That's how I'll end the webinar. I'll show you market, the market pulse. Just want to see what's going on here. Why can't I find this chart? Oh, there it is. All right, so back to my entry. Right, I got out of a couple, so now I just let it work. If it comes and stops me out, at least I got out of a couple. I take a minimal loss on to the next trade. Other than that, I'm waiting for that yellow lug area. This liquidity actually pulled, but waiting for this area where it bounced off of earlier. I'll look to get out of at least 3/4 of my trade. I either get stopped out, or if a new volume event comes in, I'll draw the zone and I'll trail my stop to that new volume event to stop out of the long. Other than that, now I get to watch paint dry, which is usually the case in ES lately. All right, so quickly, this is market pulse. This was this morning. This was 7:15 Central, so you can see the buyers came in. A little offside, came back, buyers came in again. He actually came in right here. Still holding it up. Buyers came in again here. Buyers came in again here. Buyers came in again here. Guess what? Buyers are not coming in all of a sudden. Doesn't mean you just short right here, but the minute this gets below this area, it's go time. And then this is a scalp type trade where you're not risking as many. I mean, this is still a 50. Usually it's not this big of a zone, but the point is, just think if you are these buyers, your firm gives you 500 to buy. All right, yeah, got him. Yeah, got him. Got him, guy. Got him, owner. Telling your owner that the owner of the firm. All right, I'm long 500. I love this trade, and then you're here, and you're like, oh crap. Yeah, I gotta puke. And this is the tendency too. It'll move away. This is just like a retest failure of the volume. This is the same stuff, guys. It's just a little shorter term type of trading. Here's your move away, and then look at that. I mean, these were stops, but there's the sellers. I like it more when it's not stops, but the selling started to come in, so there was puking. First of all, what do you think the puking was? I can guarantee you some of this puking were some of these buyers, right? It comes back to that area where it started, the second part of this started, where all this condensed buying started. Let's clear this out so it'll be a little more clear here. That was this. Look at that, right? That was that. Moved away, tried to hold where this other buying came in, bounced off, gone. Killed. Buyers offside, and then you had selling, and look at this. Then the sellers came in here. Aggressive selling, aggressive selling. This is the pattern. Here it is right here.
Gold Ice Iceberg Sell GC 150 for contracts.
Gold knows I'm talking about it. Here's a move away. Here's your retest of that zone. Gone. I think this went lower too. I wasn't watching here. That went a little higher, but it did stop at this prior event. So this never got back below there though. So this is what I wait for, right? So I wait for an actual move back out of the zone. And this is still a work in progress. I'm just showing you there's going to be different strategies for this. But I want to see that. I want it retest, and then this came in too. So I would want to see a retest and then get back out of there, and then I would put my stop above there. But even if I did get stopped or put on that short off of that little move down, well, then you take a small loss, right? It's just like anything in trading, nothing's 100%. But knowing these areas, just like the one in ES, whether the buyers are winning, I showed you this already, it's incredible information. This is Market Pulse, right? And they have different, you can have different, this was the buying I showed you that held and took off right there. I have mine set at yellow and black. But these are the different ones you can have on Market Pulse. Again, just Google Market Pulse Bookmap. You can look at all the options. They have all these different price change, spread change, volume pressure, and balance. I am using volume pressure and balance. Incredible stuff. All right, I don't think there's any questions. Once again, you guys are not taking advantage of these webinars and ask what you want. Wait, here we go. No. Why disregard the liquidity at 44.12? It seems to me that it is an obvious change in conditions. What am I disregarding? What was an obvious? How is it an obvious change in conditions, Kendall? What do you mean by that? First of all, this was just thrown in randomly. I don't pay attention to liquidity that's just thrown in randomly. Actually, it was over here. I think that's what you're talking about, right? These are most of the time these are guys just playing. I used to do this. This is how I know. I used to try to scare the market. I'd be short. The market would be rolling. I'd throw a 500 lot in, and the market, they would see it, and then they would run it. They were running away, or they'd say, "Oh, someone wants to sell," and they run away. This is not important to me. Longer term liquidity is important to me. If you want to find out the hard way and start trading off of algos that are just like this stuff, this is just algos. You want to trade off of that? Be my guest. You'll find out the hard way. It's not reliable. Scott, could you please explain the white and black dots and how you set them up? The white and black dots are the SI, the sweep indicator. It's showing when markets, we showed this one earlier this morning, And that was part of the market pulse too, so they go hand in hand many times, obviously. So this was 3,400 sweeps. This is the market pulse. I mean, this is market pulse down here. This is the sweeps indicator. This is what you get with the MBO, the Global Plus. You want this because it really helps you draw the zones. So I showed this last week too. All right, so just quickly. This is what you get when you join my trade room. You get the welcome video that I finally made. But look at the, where's it at? I know I got an example here. Comparison, right? So this is why, guys, I'm all for cutting costs. All for it. If you can get free charts like I do with Thinkorswim, all this other stuff. If you get it free, great. This is not where you want to be cutting costs. This is the most important information you can get. So you can see here, this is global versus global plus. Right? You get down here, everything's checked, and then you don't have this stuff. This is all global plus. You have all these other things. Again, I don't even know how to use some of this stuff because a lot of stuff's new. But this is for like trading on Bookmap, actually on the charts. But this is the most important sweep indicator and absorption indicator as well. You can use both of those are part of Global Plus. Don't chintz on the stuff that matters the most. So anyway, that's the sweeps indicator. That's that. You can trade before the market pulse. You can trade off of these areas too, because this is obviously very important, right? Someone comes and sweeps 3,500 contracts. That's pretty important. It's just like a volume event. It is a volume event, but you got to be careful. For some reason, the thresholds on sweeps they're multiples of the SI indicator. So I would use, if you're trading off of these sweeps. So I use white and black. So white are buy sweeps. Black are sell sweeps. I just need different colors on my chart so I'm not confusing because I'm colorblind on top of it. So that's why I use that. That's why I use different colors down here too. You can make these whatever color you want. So the white for me are buy, and then you can set your threshold for what you want to see in the sweeps indicator. Oh, where's that? Right here. So I got mine. It doesn't show me unless there's 500 or more sweeps. Basically, I have it set at what my stop thresholds are for my stop on the SI indicator. I don't trade off of that, but I want to see that, and it helps me draw my zones too. You want the sweeps indicator, put it that way. Liquidity has moved down to 20 to 12, right? Yes, sometimes you can definitely see that, right? It's pretty clear a lot of times. If it like the whole block moves. But you don't know for sure. You don't know if that's the. This is probably some of that, because if you see it obviously disappear from up here and then all of a sudden it appears down here, yeah, that's fine. I'm still playing for that liquidity. I'm not. Most of the time, this is just algos, and you'll see it put it in pull, and usually it's one or two houses. You'd be amazed. We're on my webinars all the time. You'll see all this liquidity, and it'll all disappear at one time, and then they'll put it back, and they'll pull it. That's one house. It's not everyone coordinating at one time. It just shows you how manipulated these markets are, which is fine, and they just got their fill, by the way. But the point is, with this information that we have, if you can't beat them, join them. I say it every day. Right? You're not in the dark. You see exactly the games that are being played. It's huge. It's the edge. Like I say 100 times a webinar. Those are sweep indicators. Yeah, thank you. Twix. White ticks. Thanks. Okay. All right, guys. So I'm still long ES. Again, I'm watching this area that has failed at earlier. Quickly. I got it off because I got another presenter coming on here. So if this cannot get through this yellow lug, I will get out of a total of 3/4 of my position. So I still have 6 on. I'll get out of like 4 more. I'll leave 2 on. If it fails up here, I'll use my market pulse. I'll use
NQ stopped by NQ 347 contracts.
I can't. I'm already 10 minutes over, guys. But this is a new setup, so it's the same stuff we've been doing. Now it's a NASDAQ. Draw your zone. I'll give you a quick synopsis of where we're at for different trades you can take here and see if we're in an Izzy zone. Real close to a slug. There's a lot going on up here. I would love one more stop run, and I'm shorting this thing with both hands, as they say. You got extreme standard deviation of VWAP. You got a baby lug. You got the major lug. If I get a stop run in there, that's the slug trade. I will gladly take that. Other than that, let's see where we are. I think this is an Izzy zone as well. If I can find the damn chart, because I lost it. Where are you at, NASDAQ? There you are. No, it's through the Izzy zone. So, like this zone, I'm pretty much going to delete now because it's traded. We'll see how it reacts here, but if this just rips through, then it's basically traded down through it. It did hold there, but then up through it, so I'll erase this zone. But this is not in an Izzy zone. But if this moves a little higher, we got the lug up there, and we have an Izzy zone up here. So I'll gladly short that, and that's where this directional conviction started. So heads up on that. This is just your usual bungee jump. This is all these equities do. They do these bungee jumps, and lately they keep going, but I will still short it if I get the volume set up there. And surprise, surprise, look what's getting filled here. Would that be liquidity? That's weird. Really strange. All right, guys, this is what I do every day in my trade room, twice a day. Come on over if you want to learn what's really happening in the markets, because this is what's driving the markets. Other than that, have a great week, and I'll see you guys next Thursday. Thank you.